Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel. As always, joined by Joel Elconin and Dennis Dick. On today's show, of course, the big story will be the Italy referendum and how it just does not seem to matter. We're going to talk about the market's reaction, the financials and oil and gold to all that mess is going on over there in Italy. Couple other movers to discuss. GWPH had earnings a few minutes ago. Oracle is out for the bell today. Few notable ratings, but not a whole lot going on in ratings land today. At 8:35, we're going to be joined by Ryan Craver. He's a retail expert and the SVP of Emerging Brands and Digital at the Lamore Group. He's going to break down the whole sector for us. But before we do that, Joel's going to tell us how we're doing on the S&Ps this morning.
Doing okay this morning. Big range, almost a 20-point range overnight. Actually over a 20-point range. Trading at the magical 2200 number. Let's keep an eye on Thursday's high up there at 2203. We did get through that in a regular session, but below it now on the downside. Long ways away from yesterday's low. I'll be keeping an eye on the close if we do drop by 8 handles at 21.92. Crude over $52, 52.17, trading up 48 cents. October 10th high, 52.72, and October 19th high was right there too at 52.68. On the downside here, we do have gold and silver both trading in the red.
Okay, we're just waiting for sound here. Spencer's working on it.
I don't understand why we don't have sound, because we got everything working on our end. So keep going and I'll work on this.
We're not going to talk to nobody, so we'll take a quick break and we'll get it figured out.
I don't understand why we have sound.
We have sound here.
Everything is working. Hold on. Everything is working. Hold on a second. Good morning, traders and investors. I think we should be back. Sorry about that. May have had some difficulties. Not really sure what the problem was there, but I think we're good to go. If you can hear us, let us know. If not, we'll let us know either way. But Joel, tell us about those S&Ps again.
Trading up 8.25 points at 2200.25. Pre-market high 22.075 on the downside. We'll keep an eye out for the close if we get there at 21.92, because that was a double close. Crude trading above $52 at 52.19. Resistance up at the October highs at 52.70 area. Gold and silver did get a pop, but now both trading in the red. So we want to talk a little bit about that Italian referendum.
What happened there when Italy? Because I come in last night, look at the S&P futures, we're trading down 10 handles, and I'm like, okay, maybe we're actually going to get a little pullback here. Didn't sound good. And then I go to bed, I wake up, and we're up 10 handles. What happened, here overnight? Tell us the details there, and then is this just a buy the dip market?
You
Spencer?
talking to me? Oh, I wasn't sure you were talking to me.
Yeah, all the details on that.
Oh, well.
Spencer, hello.
All right, come on. Well, the Prime Minister is resigning after his constitutional reform was rejected. The referendum was rejected there in a vote by 60% of the vote went the other way. So he's trying to, save the banks and save the government from the impending doom that is their economy has been. We know it's been stagnant for about a decade or more now. So he's out. That led to, oh man, there's a whole bunch of instability. He's leaving. What's going to happen? So we think, oh man, more storm heading our way, but not so much apparently, because what you were saying before is we seem to be muted in the market reaction.
Yeah, it just seems like no matter what, the market will find a reason to buy it. I mean, this is obviously first interpreted as bad news with the S&P futures selling off, but there's so many people who are looking at the end of the year, so many institutional money managers that obviously sold stocks probably right after Trump and then have been scrambling to cover ever since. And it seems like every time we get a little bit of a pullback for any reason whatsoever, they're scrambling to get back in. And that's just what it is. We've got this underneath demand that Joel's has mentioned multiple times in the overall market. I know different sectors and some different stocks continue to be weak, but overall here, they're just buying things.
All right, Todd. I mean, that's really the only way to put it. There was a dip. Little worried that this was supposed to be real bad for the banks. If this could go through, because basically got a whole new regime coming in. The prime minister in Italy thought he could get some tighter reforms. Huge turnout, another vote. I don't know if this is surprising as the Brexit or the Trump victory, but whatever the bottom line is, you can't argue what the market's telling you. The market told you that you had to dip. I'm not buying though. I'm not buying after the big rally after 2179. Got back over 2200. We've already traded our average daily range today, so I'm thinking that people are going to look at this as a little bit of a selling opportunity. If we get anywhere near up that pre-market high of 2205.75, I bet I'll have a little bit of short money out there coming back.
I won't.
No.
It's so hard. I mean, this market is so hard to short. And, certain stocks, sure, but the market overall just seems like it has that. But it seems like you're fighting the tape always when you short it. I mean, imagine, just scenario analysis. Imagine you were short over the weekend here, and you see this news with Italy, and you're like, okay, finally, we're going to see a down market. You see the futures overnight. We're down 10 handles there last night, and you go to bed. And you think you're pretty happy. You're like, okay, finally, we're going to get a nice pullback here. I'm going to, bring in some of my shorts here tomorrow. And you wake up, we're up another 10 handles again. You're looking, what the hell? That's what you're saying if you short this market. And it's just learned behavior here now. It is so difficult to short the S&Ps because for whatever reason, they just keep buying them up.
Lunch bet? Lunch bet here on the D's S&Ps. I say we do not close above 20.
I don't even have some S&P futures quotes, and I've complained about this multiple times because as a pro, they want to charge me $700 a month. So that's why I just look at the SPY. So if you bring up the SPY, I can do you a bet on the SPY, but I'm not going to bring up something I don't even have quotes on there. I can go and you can get free delayed quotes or whatever. But isn't that ridiculous? If you're a professional, you get it for free if you retail or for $4 a month. But if you're professional, it's 500 or 700 a month for you. I don't even know where it's at now. They keep jacking it up. But that's my little tangent about complaining about quote costs, which cost me 10 years ago. But all the exchanges need to make money somehow because they don't get the volume anymore, so they want to sell me the quotes. Anyway, so
do you want to fix that? Because I know a way that you can fix that.
Tell me how.
All you need to do is tweet at Donald Trump, and he will get on it, and he will take care of it.
Stop charging me for my stock quotes.
Send it to Donald Trump, and he will take care of it. Okay, the Spider is at 220.55. So I'm going to say we don't above 220.55. You want a lunch. Below 220.55, I want a lunch.
Oh.
That's a tough one. I know.
It is a tough one, and I'll tell you the two reasons. Obviously, we were way down. We got 20 handles below. You're looking at all the air because we sold off 10 handles and we rallied 10 handles. So we got about 20 handles of air below us now just because of the sell-off. But if you gave me like yeah, you're not going to give me that edge. Though. I was going to say you give me like 220, I would do it. But if you think we're going to give it all back.
I don't know. But we'll come back.
All right, there's no lunch bet here.
All right,
but bottom line, Joel's bearish. I'm bullish.
I'm not that bearish. I'm just thinking that we had the break. For Friday, we had the break yet. Overnight. We've come back a long way. Yeah, I mean, you could look at how many times do you see this? You have a 20-some point range overnight, And then you start trading. It's at 2,200, and it goes to '05 and '95 and '97, '99, chops around, and then at
But Santa Claus,
the end of the day, it's at the same price as your opening print. So that's all I'm saying on that. But
Ethan wants to take a bet.
all right.
Santa Claus is coming though, Joel. We're in December now. Don't we just always go up in December? Seasonality is here. Get over to Christmas, get the Santa people buy ahead of the Santa Claus rally. Oh yeah, all kinds of good stuff coming up here for stocks.
All
All
right.
right, let's jump into individual stocks here because just because I bullish the S&P doesn't mean I'm bullish every sector. There's a lot of stocks here that have been under pressure. And it continues to be the same stocks, the defensive stocks, the utilities. It continues to be some of the other defensive stocks too. And they had inside days yesterday here, but with the S&Ps trading up 10 handles here now, at least looks like we're going to have a risk-on morning. And when I say, that's the first thing, when I'm coming in here and deciding, how to trade, today. First question I always ask myself, is it a risk on day or a risk off day? At least, at the open. Is it a risk on open or a risk off open? Right now, when we're trading up 9 handles here on the S&P, and we were way down overnight, it looks to me like it's going to be a risk on day. If I look at the individual sectors, financials looking very strong here this morning. They're already catching a bid. Goldman Sachs already trading up $1.64. Bank of America trading up almost 1%. Citigroup trading up almost 1%. So some, your financials are looking strong. Gold is looking weak. Whenever you see gold trading down, financials up, that's telling you it's more of a risk on day. Gold's trading down significantly here after being up last night. So, and then, you think about utilities, defensive stocks, even stocks like AT&T and Verizon, sometimes those get hit on days like this. And then obviously, you have other sectors that the oil stocks are looking strong here again. Oil started to pull up. It was down last night, but it's back up here once again. There's that underneath demand that we keep talking about that keeps buying the pullbacks here. So risk on day, that's how I'm approaching it here. What are your thoughts here? Just, and let's jump into the financials because, these things have had a relentless bid underneath them. Every time they pull back 1%, buyers re-emerge. We had a down day in the financials on Friday. Bank of America did pull back pretty significantly actually from the high. Got up to 21.94 and actually kissed 21.02 on Friday. It's already back up here at 21.39. How do you play a stock like this?
How do you play a stock like Bank America here from a day trading perspective or from a longer term perspective?
Day trading perspective. Longer term, we can
Okay,
jump into.
day trade.
Let's just say from a day trading perspective and a swing trading perspective as well. Because we look, 3 weeks here, stock was $16 before Trump got in. Now we're looking at the stock's almost $22. You look at it and, Nick Shahino, he says it's too hot to chase or too high or too, why do I always get that backwards? I'm never going to say that right. Anyways, too high to start,
Too
I'm
high
not
to
going to say it.
chase, too hot to short.
There you go. So how do you approach it here? You look at this thing. I've tried to short it a few times on the way up, and that's been a hard trade.
I have been wiggling out of some 21, some D's 21 calls here, and I have just got the small lot left. I'm going to see what happens at 21.50. 21.50 was the high close of the move. 21.50 was Friday's high. It's a half number, not a whole number. We haven't hit that in the pre-market yet. Maybe we did late last night, but that's what I'm looking at. I'm going to see if we could just barrel 21.50, 55, 21.60. If we stall 21.50, I may be more tempted to take, a lower risk short. The high of the move has been 21.94. Just going back real quick, did we, Bob Wire and Phil, did we get satisfy your question there explaining risk on and risk off?
Yeah,
Um,
and Phil
Phil's
Phil's
got it.
actually
Okay.
answered it. It's pretty good. He said risk on, money's going to stock, risk off, money's going to treasuries. Kind of. That's definitely the direct move. And then there's obviously stocks that trade like treasuries. So when I say risk off, stocks that trade like treasuries, your utilities. That's, very much trading like a treasury. Some of your food stocks, some of your defensive stocks, some stocks like even some of your tobacco stocks, stocks like AT&T and Verizon, those trade more with the treasuries than they do with the stock market. So naturally, when I'm saying risk on, I have a tendency to short those types of stocks today. And when I'm saying risk off, I have a tendency to buy those types of stocks. That's what I'm saying with risk on, risk off. So right now I have a tendency to be a little more, just at the open, but looking, long financials, short utilities. But, not just saying, okay, well, we're going to continue this trend and just shorting a blanket. Just saying that if there's a few utility stocks that don't open down that much, those are ones that I would maybe pick on. So, I jump into the individual stocks. I'm not saying just go out here and short the XLU in the hole when XLU is trading down, it's only down 10 cents here so far, but it could go weaker. It's 46.70 offer right now. Best bid's way down to 46.56. I'm not saying go out and hit the 46.56 because you are shorting it in the hole then. But I'm saying if there's some defensive stocks that maybe open up, because some people out there think, okay, stocks are up, I'm buying everything. Well, that gives you the opportunity. As a stat arb guy, you might know that, well, no, these types of stocks that maybe are opening up, if AT&T and Verizon were to open up today, there might be a decent chance, that they pull back off the open because, this looks like a more risk off day or risk on day.
Yeah, and I also kind of think of that, in terms when you mentioned that, as, if you're talking risk on, maybe buying, your Amazons, your Facebooks, kind of your riskier stocks, with the higher PEs, and then looking at it that way as well, as opposed to stocks, like you said, that are traded primarily for the dividend and for the yield, as with the treasuries. So that's kind of
It's just,
kind of
yeah,
another
the most
rabbit.
important thing to note there is that certain stocks don't trade with the S&P. Certain stocks trade more with like the TLT. And the TLT is a great indicator. If you don't want to have bond quotes and you don't want to be looking at the bonds, take a quick look at the TLT and then you'll get a pretty good feel for what the XLU, because the correlation between the TLT and the XLU is very high right now.
Wow, and a little bounce in the TLT though off Friday, Thursday and Friday, kind of a 2-day rally. Wow, what an ugly looking chart there. But see if you can find the bottom. They get a little retracement here, and went from 144 to 118, 28.38,
It's
26,
been
20.
just a shellacking
Yeah.
for, everybody who is hiding in bonds, everybody who is hiding in gold, everybody who is hiding in utility stocks and defensive stocks since Trump. And, originally everybody was saying, even I said it, I thought the market was going to get hit when Trump got in, and it did get hit, but it only lasted a day.
Yes, it was a not even a day. It was like a limit down and a turnaround in the morning. But trying to clear the $2,200 level, that's important. We were there for a few days last week and hanging there right now.
So what about Goldman Sachs? Because Goldman Sachs was 175 bucks. It's now $225 here this morning. This has been a pretty incredible run. You're talking about a 50-point run, about a 28% move here in Goldman Sachs since Trump got in 3 weeks. I mean, this is, pretty unprecedented move here, at least, in the last, 10 years for Goldman Sachs to have a move like that on no individual company news, just, the macro picture with everybody thinking that, regulations are going out the window. We're going to have the Wild West of banking here again. Is this a stock, let's say, put your medium term hat on, Joel. Is this a stock that you want to be buying up here, or is this a stock that you want to be selling?
Well, automatically what I'm going to say, looking at this chart, but I'll
You're the fader.
cooler cooler heads will prevail, and I'll just say that we had an inside day on Friday, and I really can't get excited about the short side anyway whatsoever until we break 220. 220.35, your low on Thursday. 221.22, that was your low on Friday. So hands off. And then if you bust above 227.16, that has been the high of the move. You just can't, you can't continue to be short as it continues to make new highs for the move. Goldman Sachs has not been up at these levels, boy oh boy, since the financial crisis here. Let me go all the way back. I'll give you a number. December 2007, Dennis, we hit 229.35. So I would say up to
What's
two.
the all-time high, Goldman?
The all-time high in Goldman is 250.70. And
Wow, we're within striking distance of that.
yeah, yeah,
Financial crisis and all, we're back. We got down to like 49 bucks or 46 bucks back in the financial crisis. So it has been a long road back for Goldman Sachs, but we're kind of starting to get within striking distance
yeah,
of it again.
air up from 227 up to that 230 level that I noted. And I guess for a bull case scenario here, what I would like to see, I don't know if the market's going to give it, maybe 2, 3, 4 days, a little consolidation here. You had
A
the
pause to go higher.
right. Look what you did here. Boom, boom, boom. All the people. Oh, I'm getting nervous. You had those 4 strong up days, but then it sat there for 1, 2, 3, 4, 5, 6, like over 10 days, just hanging at the
Yeah,
210 level. Then
I
just
broke
got
out again.
another burst. So I think best case for bulls would be just to get another one of those patterns, maybe holding the 220, and then consolidate and break above 230. But we do have an impending interest rate hike coming, and that will add some volatility to the market. But looking at the inside day in Goldman Sachs.
Looking just, interesting that you mentioned those consolidation or pause for a few days. Check out the chart of Nucor. I was looking at this one this morning, NUE, and we've had an incredible move here in this stock too. And full disclosure, I do have this one in my investment portfolio. I've been itching to sell it because it's been such a good move here. And when's the last time NUE moved up 13 points? No company specific moves, just flying up here from Trump. But you look at it here and you think, okay, well, eventually it's got to pull back. But it's consolidating here now for the last 3 days after, it had a little washout day there. And it almost looks like it's ready to break out here and go up further,
Yeah,
doesn't it?
it does, and
Looks itchy.
it does look very itchy here. Three lows right under 4 out of 5 lows right there at the 61.80 level. So there's your great support. $1.20 away from there, and then you got three highs within a quarter. Above 63.27, you get into a real gappy area. You get to where it came down from the financial crisis. That was in July of 2008 when it swooned from 73.89 down to 57.22. So real close eye on 63 and 61.80 in Nucor.
If you look at other stocks in the sector, I mean, they've been incredible. Steel Dynamics was back $28, now 37. Nobody's run more than U.S. Steel. When Trump got in, it was around $20. Now over $33 a share, trading up at the 34 handle here. And then AK Steel, which is another one in the sector, was down around $5.50. Trump gets in. We're now almost $10. Actually, this morning, AK Steel is taking out the big psychological $10 level here this morning. I'd still say, check it out in the regular session because we've not been up here on AKS in a long time. I'm just looking at the book. The book actually does have 100,000 shares for sale at $10. So that might put a little bit of an early cap on it. I think it'll struggle to maybe open over 10, but I think it probably takes it out today.
Favorable article in Barron's too about Arch Coal reemerging from bankruptcy and the price of coal going straight up as of late. Good timing for that. Let's see what it's doing in the pre-market action. Pre-market action, not doing much here, but you got to respect the $80 level. We've hit that 2 or 3 times here in November. Break out above 80. You can see the numbers there. Not much to 82.5, and then closer to 85.
And we're bid up at 80.60 here this morning, and nobody's hitting that bid, telling me that we probably are taking out the $80 level here today. So that one looks ready to go here too. The same stocks continue to show the most strength. So it's a very persistent, pesky market here. Let's jump into a few of the ratings changes from overnight here and over the weekend because we had a few interesting ones here. Let's go to Alcoa. We have not talked about Alcoa for a few days on the show, and it had a pretty incredible run here too. I mean, we were, after the spinoff and when they spun off that other company there, AA has been straight up, and we got up and we topped multiple times out there at 32. We could not get above it. So then we started to sell off for 3 or 4 days. And now we're just starting to consolidate here down around $29. Well, this morning Citigroup is downgrading the stock. So we are seeing a little bit more pressure here in Alcoa. I'm going to say it needs to hold at 28.60. As long as it holds 28.60, I think you might have a few people trying to pick the bottom. Takes out 28.60, that is concerning.
I'll give this one a little bit more room here because after the spinoff, 22 to 32, you had a 10-point move. A pullback here to the $27 area. A little consolidation would be healthy after a move like that. So, Dennis, you're looking a little bit more short term because of the 3 lows in that area. I'm trying to give a little bit longer perspective on that one, see if we can get to a 50%. And what is the symbol for the other part of Alcoa?
I knew you were going to ask me. I'm trying to remember. Chad, help me out. It's only been out there for 3 weeks. I should know it because I actually have it in my investment portfolio because I had a few shares of Alcoa left. But let me just go check it out here. Spencer, do you know it off here? That's Alcoa spinner.
I do not.
Brettster will know.
Finding it. It's Arconic, and it's ARNC.
ARNC. I
just
did
took a
see
Google.
that.
ARNC.
So
that's
now
the spinoff of Alcoa.
All right. So there, that looked.
That stock looks itching to go here too. Little rounding bottom there, Joel. I can get on board with that one.
I like that.
As long as it stays above 19, I kind of like this chart.
Yeah,
it's a nice little setup.
Yeah, 19.5's had some nice lows too here, and let's see, we've had 17 to 23, 6, 3. Yeah, just hanging out, little 50% retracement since the IPO. So keeping on $19.50 area. Triple Z, Stefan helps us out with that one too.
ARNC. Ratings changes jumping back to him. Visa getting upgraded here at Guggenheim over the weekend to a buy. Visa has been under pressure, and we talk about the strength of the financials, and the banks, have been very strong here. But really, Visa and Mastercard have shown a lot of weakness over the last couple of weeks here. Visa has not had a good run. It's up at $84 really since Trump started. It's down here now at $75. 76.77 this morning because of the upgrade here. So Guggenheim coming in here and buying on the weakness. I don't know. The trend is not your friend in this case here, though. And I'm going to say it just like we were saying underneath demand on a lot of stocks. I'm going to say overhead supply on Visa.
Yeah, one upgrade doesn't reverse a trend from 83.96 down to the 70 under $76. Let's look at the pre-market action. See what we got here. We got a pre-market high right on the nose of 77. I don't know if I could lay a short out there, but I'd be interested to see what happens at 77.62. That was your high from Thursday, and that coincided with your close on Wednesday as well. So there's my number. On the upside, on the downside, if they decide to totally fail this, lower 75 handle, two lows, 5.25 and 5.17.
Nike getting upgraded here at HSBC. That stock is trading up about 1% in the pre-market. Nike's found a little bit of a bottom here around $50, and it's psychological. And if we go back just to the beginning of November, multiple lows right there in the 50. Then we ran up to 52, and now the last 3 days we bottomed here right around 50 as well. So you got HSBC looking like that they like this 50 level here. It is trading up 60 cents here in the pre-market. I'd say as long as Nike is above 50, I could get on board with it, but it's really still in a range, 50 to 52. And as we get up towards 52, seem to find sellers.
Yeah, I don't want to agree with you again here, but 50 does look like good support, and 52 does look like good resistance, and even I don't even know if you could take a head fake above 52 here, because just look, these daily charts going all the way back to October. You found multiple highs in the 52 handle, not one exact triple top or triple bottom, but just someone trying to wiggle out here the 52.50 area. So one upgrade I don't think makes this immediately think it's going back to $60.
Marvel MRVL downgraded to sell at
Whew.
Goldman Sachs. That was a really poor Goldman Sachs. I'm still congested from this 1 month cold. Anyways, 1402 is where it closed. It's offered down to 1385. Just traded 1366. It's looking to fill the gap.
And you look at that, you got a gap fill. Goldman and tech analyst was looking at that gap to be filled, and you're going to do it today. MRVL went off the board at 1402. We have it trading lower in the pre-market. I will just give you where you need to get the gap fill, and then you can see if it will hold on or not. Boy, it's right there right now. That high was 1358 when you gapped up the following day. So you need it to hold there. Below that, the low on that day was 1323.
Jump back over here to GM and Ford. GM just is ex-dividend here today, so I just want to mention that first. GM adjusted close is 35.03, so the close is 35.41. Ex-dividend 38 cents here today. The adjusted close is 35.03. What's interesting is he had that huge run on Thursday, and then he gave it back on Friday, and he gave back most of it on Friday. And Ford too. Ford really got a lift, and it's pulled back as well. You thinking this pullback in GM and Ford is a buying opportunity, Joel?
No, I mean, just based on historical trading patterns, especially in this GM, whenever it has like a big run like this, a lot of times it gives it back. But, the people that held it, and didn't think they were going to get the dividend out of it, I could see selling it and maybe rebuying it back. But, if anything, I'd like to see this thing get into the lower 34 handle. There's three lows there. If it came in the lower 34s, maybe we would try a trade risk down to the 33s if the strong trend's going to continue. But you haven't seen a 6 point plus move at GM. Let's go to the weeklies or the monthlies. Let's see here. Man, you've had, of course, 6 points on the downside, but I don't know, little weakness here. I kind of like to see it in the lower 34s.
What about Ford with the $12 level?
Ford, man, this thing hasn't hold it for the dividend. If it comes back into the $12 area, a lot of consolidation there. I could see, taking it at 12 and risking under 11, but that didn't even get as much pop as GM did last week. Seems to be the laggard. I think holding this one, you're holding it for the dividend and then praying for some capital appreciation.
Okay, looking here, just at a couple stocks from the chat. We had Cajun One asking us about Pandora, and there was rumors last week of them and Siri hooking up. I mean, we've had rumors on Pandora before. Pandora got a nice lift on Friday there, running from 11.48 up to 13.57. Nothing materializing here over the weekend. Stock is pulling back a little bit, trading down here at 13.10. What's your setup here on Pandora now that it appears to be in play once again?
Well, if it appears to be in play, you have to obviously be careful on the short side. If you're going to use this to, to take some profits, you really just want to keep an eye on 1350. Your high on Friday was 1357, so we'll keep an eye on that. And then I see another pesky high here at 1340. So that is an area, if you're not a believer in the rumor, to perhaps lighten up along, or really don't want to be trying to short if these kind of news are out. But if it doesn't get back over 1350 today, rally into the 14 handle, or you don't hear any news here, there's a good chance could get back a lot of those gains from Friday.
Ace talking about ULTA. He made a good
Did
call
you
on the
see
short
that?
side on Friday on this, and ULTA was a stock that was trading way up on Friday, and it gave it all back plus more, went all the way down to 244. And sometimes you'll see this, people chasing a stock up on a good earnings report, it gaps up, and this stock was, I mean, straight down. If you were, buying it thinking, okay, well, it's filled the gap, I'm gonna buy it here now, it had a washout then, at the old price of 257 during the day, and it went all the way down that 245. So we went straight down, basically 25 points in the first 30 minutes of trade. Just an incredible
That's
move
that's
for
just
ULTA.
that's just how can that happen, Dennis? Is it that much illiquidity in something for that to have that kind of
A little
move?
bit due to illiquidity, a little bit just catching people on the wrong side. And you know what I've said this before. A lot of traders, use oscillating markets. Where when you get these one directional moves that are very sustained like that, you catch a few people. Even try to make markets, or some people try to play a little bit of contrarian in there, really hard because they're looking to wiggle out. So you buy 265, you're okay. Goes down 263, pops back 265. I'm going to get out. Doesn't give you the chance. Goes 263, 260, 255. You're down 10 points before you blink an eye, really, in that thing. So, after earnings, we see some violent moves like that. I will call that ULTA move violent. If you bring up that intraday chart, that is an absolutely incredible move to go up from that 275 area down to 245 in a matter of 30 minutes.
And if you look at it now, here's a time where you can use the pre-market levels as a little bit of a guide. You had a pre-market high at 274.78, and just hung out, and then you had to open. Now, if you could have withstood that, buck worth of heat off the open, because you opened at 72.98, went to 73.90. But it never took out. It never took out that pre-market high. Maybe that's what Ace was leaning on. Then it was just straight down fashion. I mean, if you were short, it would have been impossible to get all of that move. But got up, didn't quite get to the all-time high. But when you see a stock up there and you got a big move and you don't get the follow through the pre-market high pretty quickly, you can run into sellers and where it got all the way. I haven't seen a stock move like this in a while. All the way down to 246.30, rebounded to close. Where did we end up closing at? 253.39, or where's the close on Friday? Yeah, keep an eye on that close, 253.39 after that wild trading action. See if we can get back above there. If not, I think you might see some more selling in Alta.
Lots of stocks covered from the chat here. FCX from Violin Maker. What do you think of this one? This one's obviously been on an incredible run here too. We were up another 1% here, but you look at this, it was about 10.5 bucks, right up to over 16. Quiet consolidation here, right around 15, trying to find a bottom. I don't know. Trend is your friend. If this thing breaks out above 16, I think it's a breakout mode again.
And you want it to hold 15 here. Multiple lows. You're distance away from that. This is a big stock, trades pretty good volume, and you had four lows right the $15 area. Someone accumulating stock, moving up on the upside here. You do need to get over 16. Intermediate stopping point at Thursday's high, 1584. I don't know. Looks a little thick up here. We'll see if it can make a run the second time, but the support much better defined than the resistance in FCX.
We'll try to come back to a few of these stocks after Ryan Craver, but we're going to take a quick break. Go grab Ryan, and we'll be right back with you talking retail.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elcon, along with Dennis Dick and Spencer Israel. We have Ryan Craver on the line, retail expert and senior vice president of emerging brands and digital at Lamar Group. Ryan, how you doing on this Monday?
Fantastic. Thanks for having me, Joel.
Yeah, great time of the year to get your take on Black Friday and Cyber Monday and whatnot. But you sent over an interesting diagram here. Can't bring it up for our listeners, but just the retail sales comp recap. Off price on fire.
Yeah, I mean, we've seen pretty much everyone report except for Costco and Sears. And if you take a look at where we are and what we've seen thus far, off price, and that would be Burlington, Nordstrom Rack, Ross, TJ Maxx, have all done considerably well, a heck of a lot better than everyone else. They've posted anywhere from a 3 to 7% year-over-year sales comp increase. On the other side, you've got the department stores, and none of them have posted a good comp. The only one that was positive was Nordstrom, but Saks, Kohl's, Macy's, JCPenney, Dillard's, all of them have had quite a bit of trouble. JCPenney specifically, I know the last time we spoke back in October, I said we may see a decent sales comp from them because they started selling more big ticket items like appliances. However, it just didn't materialize. I was wrong. And they did not do well. On the dollar side, so the dollar stores, you've got Dollar General and Dollar Tree. Dollar Tree was positive. Dollar General posted its first negative comp that it's seen since it's been public. So it's been pretty difficult for everything but Amazon and off price. And off price is on fire. People love it.
How does this compare to last year's trend?
Last year was a little bit less negative for the department stores. The chart, and we can share it with all the listeners after this call, right? We can send them to my blog. But last year was nowhere near as negative. Kohl's was positive. Macy's was negative, but not as much. JCPenney was still doing incredibly well because they had the 2 years of Ron Johnson's negative same-store sales. Dillard's was not nearly as negative. So you saw the department stores doing okay. Well, it's obviously been an inflection point to the negative for them this year. And I think the off-price stores continue to steal more and more business from them, as well as Amazon.
Ryan, what about your thoughts between Macy's and Kohl's and Nordstrom? Because I trade these stocks kind of against each other. And Nordstrom and Kohl's have really had nice, huge runs here recently. Macy's really didn't participate nearly as much. You look at Macy's in the last month, it's went from 38 to 42. I mean, Kohl's has went from 45 to 55. JWN, not quite as much, 50 to 56, but definitely your outperformer there is Kohl's. Is there a reason for that? Because usually these stocks move a lot closer together.
Yeah, it's a very good question. And I believe the reason for the divergence between the two of them when I say two of them, Macy's and Kohl's, is because Macy's has come out and completely ripped off the Band-Aid and said, we're going to shut down 100 stores. I think they've been a lot more aggressive than Kohl's. They've also been able to maintain margins relative to Kohl's, so it looks like Kohl's is chasing the sales. I think longer term, Macy's closing 100 doors and being a bit more pragmatic and aggressive in their approach to get back to healthy numbers is probably the better long-term play. I think Kohl's inevitably will have a weak Q4, and they'll come out probably in Q1 of next year and say, look, we need to close some stores as well. Macy's has also had some negative news recently during Black Friday. They were down for 4 to 8 hours, depending upon where you were in the country. And that's the .com business that we know that's fueling a lot of the growth. So they've been really, really negative. On the other hand, JW Nordstrom, they're doing phenomenal relative to the other department stores. They've got an off-price model in Nordstrom Rack that's doing incredibly well, and they were the only one to post a positive comp. So if you're going best of breed within the department store space, I think you stick to Nordstrom, and then longer term, you're a believer that hopefully Macy's can turn it around, and Kohl's is going to have some difficult news in Q1 of next year.
Similar question for you with Dollar General and Dollar Tree, because Dollar Tree came out and they had a pretty good report, and the stock actually rallied. If I'm just looking at DLTR, it rallied like 7 points off of its earnings report. It's faded a little bit since, but then Dollar General comes out about a week and a half later, and it sells off about 8 points off of its earnings report. So two dollar stores going in opposite direction. Why the divergence here?
Yeah, it comes down to the positive or negative comp. So Dollar Tree posted a 1.7 increase year over year, which keeps everyone excited. It keeps fueling the additional store locations. I think they're doing a bit better job of managing this crazy growth that both of them are going through. Dollar General posted its first negative comp. I think it was down 0.7% year over year that it's had since it's been public. So I think the question that starts to pop into a lot of people's minds are, can this many dollar stores be supported in the U.S.? They both still have aggressive growth plans, and there's going to be thousands and thousands of more of these stores coming. How long can they continue to fuel a positive comp with that many stores is the big question in my mind. If you were to choose between the two, I'd probably go with Dollar Tree over Dollar General.
Out of the chat, Phil Chen's asking about Ross stores, ROST outperforming. How much is geography a factor?
Yeah, Ross stores, if you look at all of the off-price guys, Burlington, Ross stores, TJX is probably the best in terms of geography and spread. Ross is number 2, Burlington number 3. I think Ross is doing a fantastic job of still creating that treasure hunt mentality for many, many customers. The proof is in the pudding with the numbers. They're doing a very, very good job. I think on the apparel side and the wholesale side, you're going to see a weak year-over-year Christmas and holidays for the department stores. So you're going to see them have the pick of their litter in terms of product when there's a weak Christmas. So they'll come in and they'll say, look, we need to buy all this product to fill it into our stores. They can name the price and they can give the customer the value in return. So I'm a big fan of this off-price trend. I think it's still got legs. How long does it go for? It at least goes through Q4 because they've got their pick of the litter.
We're on the line with Ryan Craver, retail expert at Digital at Lamar Group. Ryan, let's go into some of these technology/retail stocks, and got to talk about Amazon. They hit it off the Q3 results here. Nice rebound. I know you've had a bullish stance on this stock for quite some time here. Nice pullback. What are you looking at Amazon for the Christmas season and then moving ahead?
Absolutely. You're totally right, Joel. I've been excited about Amazon for quite some time now. I think the last time we spoke, it was sitting around $8.40. I still see nothing that can slow this beast down. 31% over this past previous cyber weekend, of purchases that were surveyed were from Amazon. If you look at the actual growth, I estimate that it's anywhere from 50 to 60% of the growth within certain categories is going to Amazon. It's not going to stores. Stores are negative for the most part. They have this vicious cycle called the Amazon Prime effect that has just continued to slaughter and slaughter and slaughter. You're starting to see them talk more and more about grocery. You're seeing them potentially opening grocery stores, small format. I just think that there's too much going on, and all of their retail initiatives are being fueled by faster, bigger businesses, such as things like the cloud. So I am a huge fan. I would continue to pick this up longer term, and this pullback from the 840 since we last spoke is definitely a buying opportunity, in my opinion.
Jumping over here to a few of your social media stocks, Twitter and Facebook here, and Twitter has, been consolidating here around $18. I feel like forever, at least for the last couple of months here. We haven't had a new rumor to propel it up here, higher here. I mean, you got a big battle between the Bulls and the Bears. Some people are thinking there's finally some value maybe down here, and they think there's going to be an acquirer. And then other people are saying it's still overvalued. What are your thoughts on Twitter?
Yeah, so Twitter, the last time we spoke, it was at 23. I think we talked about how we're not believers in Jack Dorsey, and you need to pick a role, whether it's run Square or Twitter. I just still think that there is no near-term catalyst for growth in users. And until they start to show growth in users, I don't think you're going to see the market drive this any higher. Now, if you're going to bet on speculation around, I think the last time we spoke, it was that Disney was going to buy them. Well, go ahead and bet that. But I think it's tainted, and I don't think anyone's going to see it increase anytime soon.
Out of the chat here, Best Buy, BBY. Any thoughts on that incredible run?
Wow. BBY has surprised me. This is a stock and a retailer that was left for dead. It's the first stock or retailer to see the impact of Amazon up close and center. They lost the competition in Circuit City. They were flying high. Then they had Amazon come along, and they have done a good job of fighting Amazon off. They've continued to do relatively well in comp expectations. They're still profitable. They've done a lot of stuff in stores that keeps people coming in to try their experiences, whether it's Samsung or Apple or some of their more premium entertainment centers. It's a great retailer. I think they continue their momentum. However, it is up at 40, 45, 46. I'd wait for a pullback to see how Q4 ends up. Q4 is going to be a big, big deal for many of these retailers, specifically the electronic retailers. So I'd wait and see. I think a lot of optimism is built into it for a big Q4, and it might not meet expectations.
Hey, Brad, you're seeing this consolidation here from 45 to 46, basically. So keep an eye on that. One more, and then Spencer has one for you. Facebook, it seems to have this negative news about the ad revenues or the ad counts and stuff. Keeps bouncing back here. 115 level looks in really critical here. Have they gotten all they can out of the ad revenues here, or is another leg up in the future for Facebook?
Still a huge fan in Facebook. Last time we spoke, I think it was well above this, and I actually said to buy some more here. I take a step back and I look at where you can spend the money as a marketer today. You've got the newspapers, the periodicals, the catalogs, all of them have been losing share for a considerable time. So the question is where do you spend your money digitally? And if you look at digital, there's only really two buckets you can put it in. You can put it in Google or you can put it in Facebook. And Facebook continues to report poor metrics, inaccurate metrics, but they still gain the lion's share of spend. They've got three of the most popular apps in the world in Facebook, Messenger / WhatsApp, and Instagram. And you just can't beat that. you need eyes in this business to talk about your product, you're going to move your money to Facebook.
Hey Ryan, quick question for you. I saw an article this morning in the New York Post that KKR and Bain Capital, a couple other private equity firms are looking at the sporting goods industry, and we know they've been under a lot of pain in that industry recently. Sports Authority, right? Golfsmith, a lot of brands going bust or going private. Yet it seems to be like there's some interest in that sector. There was a comment in the article that from a member of the industry saying, I personally think there's a big opportunity in for a hard sporting goods roll up. I can easily see, if done right, someone could piece together the machine in which you can layer sporting goods brands and apparel that could get you to an Under Armour size. I wanted to get your thoughts on the industry in general.
I think this is definitely a value play for a couple reasons. First reason is there's been a lot of new entrants within the sports world, sports branded world, whether it's equipment, apparel, shoes. A lot of new entrants have come in, which has hurt some of the old legacy guys. Second thing is that a lot of the major retailers that carried these goods have struggled online, so they have started to pull back and close their doors. Guys like Sports Authority. And what that's created is, in my opinion, a tremendous value where you've got sharks feeding for whatever brands are left. And I think their ability to pick up some of these brands, potentially rebrand them, or just reallocate to where they're selling, if they're not selling them places like Amazon or direct-to-consumer, there is value in those. Longer term, yes, I think there's some underlying demand issues in those products, but people are still buying this type of equipment. And I think that there is still a buyer to be had. And I think this is sharks feeding on some deep value plays because there's been so much negativity in this space for 3 to 4 years now.
Ryan, one last one before we let you go. You did mention it briefly, but Jamie from Bright, he wants to know about Sears Holdings, what you think about SHLD.
Well, so, man, this is probably the toughest call to make because it's been death of 1,000 cuts. Lampert and crew obviously are still working at this. I think in October, if you look at the Fitch ratings, they gave them 12 to 24 months. The turnover now has created even more people to be worried about them closing sooner rather than later. You've got certain toy vendors who have cut off supply to them because they're fearful that they won't pay. I still think that there is at least 12 to 24 months. We sell a number of brands to them specifically. Would I be playing here? Highly unlikely I'd play here. I mean, why even invest in something that you're just delaying the inevitable? It's going down. It's just going to take a long, long time, and it continues to take a long, long time. There's much better names in retail where you are seeing a growth story, and we all know that growth fuels the world.
Duluth Trading, I'm sticking another one in there. DLTH, Downward Dog, is asking about it. Great run from 26 to 32, 12-point move, pulling back. I'd say holding 32 here. What do you think of Duluth Trading? They have pretty good commercials.
Yeah, they do. They do. This is a best of breed
Is that the
name.
underwear one? Is that the one where they the Duluth Trading?
Yes.
Isn't that the one where they have the long underwear?
It is.
Yeah.
I love that
Yep.
commercial.
Yeah, they do. They have very good commercials. They've got a nice niche market. They've been best of breed for a while. They've got relatively high price points. I'm actually a pretty big fan. You just got to realize that you're trading at quite a premium here forward. But maybe it consolidates and picks up from here.
Well, I hate to. This is really the last one, Ryan. Facebook Live. Are they going to monopolize that and get some money out of there? What's the plan with that? Is that like going to take over TV and cable? Facebook Live. When will that start showing some revenue to the bottom line?
I think this is their drive to try and steal from Periscope, which is owned from Twitter. I don't think Zuckerberg in any way, shape, or form plans to have it take over the world. I do think that he believes that it adds value to the platform. So as long as you're adding value to the platform and ways to work with the platform, the Facebook platform, you're going to have more eyes there that are spending more time there. What's interesting to me is you've got Snapchat coming along, who years ago said, we are a camera company. We do everything via video. Zuckerberg on his latest call has said the exact same thing. So I think that this is his play to try and become a camera company where he's going to have more lives. He's going to be able to take more time away from Periscope and from YouTube. Is it going to take over the world anytime soon? I don't think so.
We've been on the line with Ryan Craver, retail expert and senior vice president of emerging brands and digital at Lamar Group. We discovered about 30 retail stocks there, Ryan. Great job. We really appreciate. We'll perhaps get you on in January for a wrap-up of the holiday season.
Awesome. Have a fantastic week, guys.
Dennis, we just kept coming at him with him, and he
he knows that sector well. I mean, you throw him at him, he knows the fundamentals, knows the technicals, he knows retail.
Yeah, I just saw this Tilly's. Sorry about that, Rob Hood. I'm just looking at not much news. I mean, it did skyrocket after earnings. I would just say holding $14 here. Big move up, continuation. As long as it holds 14, because you don't want to get it back under 14 and, testing that bar between 12 and 14. 856, Dennis, did we do anything on imbalances yet today?
No, we haven't yet, so let me give them to you. Interesting. Okay, so I do see some sell imbalances in the financials. Most of them, 94,000 to sell in JP Morgan. 66,000 to sell in Citi. Those are all trading a lot higher, though, and they're small enough that I think the buyers will come in here before 9:30, so I'm not giving a lot of weight to those. Also looking at Walmart's 47,000 to sell here. That one kind of jumps out. Big one jumping out here again, Alibaba, 254,000 to buy. And Alibaba, that is a big buy imbalance, although there has been, every time Alibaba has rallied, it seems to find more sellers there. So not sure if people will use this as a selling opportunity if it does rally today. But it is trading up 0.3% in the pre-market. But that's a big buy imbalance on Alibaba, 254,000. Maybe give us a quick technicals on Alibaba.
Alibaba here. Quiet day yesterday or Friday after that down move digested. I mean, you are finding some support under $90, 89.18 was your 2-day low. So 89 minor. I don't think I could get super excited if this thing goes through 91.74 because you have that big bar there up to 94. But until this thing can get back above 94, I don't know. Just looks like it still has not completed its downside move.
I want to note real quick that while Ryan was on, actually, a few minutes ago, we had a report from CNBC that Under Armour announced a 10-year partnership with MLB starting in 2020. Under Armour will be the official uniform provider for Major League Baseball. Stock is trading up, I think, on
Who was it? Who are they taking it from? Or did they already have that?
No, they didn't have it before. Good question. I don't know off the top of my head. Good question.
It wasn't Nike. I don't know.
No. It was, I want to say maybe Rawlings or Russell.
We should get Ryan back on the phone here because I want to know Under Armour. This stock has been a perennial underperformer here. You go out to the weeklies even. You're talking. This is about. It had an awful 2016. I mean, we started 2016 up around $41. We're now here at $30. We're getting a little lift off this thing here this morning, but is it just a valuation issue here? You just wonder why Under Armour has been such an underperformer. I mean, Nike hasn't done great either, but Under Armour has not done well whatsoever in the last 6 months to a year.
I tell you, if there's one guest that we could have on for an hour, it might be besides Fari. It would be Ryan Craver because he just knows these stocks and they're volatile and they move around and he doesn't seem be phased by it. Has a great understanding. All right, let's wrap up today's Monday show. Cold day here in the Motor City. S&Ps right where they started. Dennis, one more time. I'm going to give you 220. I'll come down a little bit. The Spider is at 220.58, I believe, when we looked before. and now it's a 220.55.
Right there.
I'm going to give up the edge a little bit, and I'll go 220.50.
4 cents? No.
All
And
right.
20 points of air below, I'm not making a bet. It's not enough edge you're giving me.
Okay.
I'm all about the edge.
All right,
It's not enough.
Spencer, let's wrap up today's show and preview tomorrow's.
Tomorrow we got Nick Shaheen on, as we do every Tuesday. He's our options expert. You can check him out at on Marketify with his product Create Income with Option Spreads. If you missed any part of our show today, you can listen to the whole thing again on YouTube right after we're done here, or on our podcast. It's edited slightly to get the gaps out and add some stuff. So that's on iTunes, SoundCloud, and Stitcher. You can find that by searching for PreMarket or Benzinga. Don't forget to check out Benzinga Pro. You can get a free 2-week trial today by going to pro.benzinga.com or calling us up at 313-723-2000 to get that free 2-week trial. Please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. So that's it for us today. Hope everybody has had a good morning. Hope you have a good rest of your day, and I hope you join us again tomorrow for Nick Shaheen.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.